The gold stocks, again, got absolutely hammered today. Gold is up 25%. I've never seen a year like this. 25% increase in the price of gold. Now, what investors don't understand, what the Fed doesn't understand, and I'll get to that.
Are we witnessing the start of a financial crisis? Peter Schiff thinks so, and the data supports his claim. Don't wait to prepare. In this latest video, Peter Schiff reveals why Jerome Powell's latest move may have just accelerated a looming financial disaster. From inflation fears to skyrocketing deficits, this could be the most crucial economic warning of our time. Let's dive in.
A lot happened today, and so I thought it was important to do this podcast this evening. And so if I couldn't use the studio equipment, well, I'm just going to use whatever I got. Anyway, we got the widely expected, and as I said, Powell lowered interest rates. Jerome Powell, the Federal Reserve, lowered interest rates today by 25 basis points. And the only reason that the Fed did this was because the markets expected it, and Powell didn't want to disappoint the markets. Well, the markets didn't get the memo because the Dow Jones dropped over 1,100 points today. It was down with 2.5% on the day, and that was the best performing of the stock market indexes, although the Dow was down today for the 10th day in a row. Now, a losing streak that long hasn't happened since 1974. And, Gerald Ford was president, and we were in a brutal bear market at that time in the 70s with all the inflation that we had back then. They had a streak of 11 consecutive down days. So if we're down again tomorrow, we'll tie the all-time record. And if we're down again on Friday, which we could easily do, I could easily see the market down another 2 days, we would break a record. The Dow would have its longest losing streak in the history of the Dow. So that would include like the years of the Great Depression. So it's very rare that the Dow is down this many days in a row. In fact, I was, commenting yesterday, just watching all the news coverage of the stock market and just looking at how bullish everybody was. And of course, the NASDAQ made a new record high yesterday, even as the Dow was continuing its losing streak. And in fact, the breadth of the market has been very, very bad over the past several weeks, as investors have been enthusiastically buying anything speculative with a symbol, including cryptocurrencies or Bitcoin. You've had this animal spirits that were running wild on Wall Street based on optimism over Donald Trump and this super business-friendly government. And nobody was bearish. Everybody was bullish. The market could only go up. And to me, it looked like a top. Like, everybody is wildly optimistic, and nobody could see the risks. And there were a lot of risks. There are a lot of risks because we had a very expensive market. The market was expensive before Trump won, and it became even more expensive after. But it was overlooking some very significant headwinds in the fact that we actually have a weak economy with rising inflation and rising interest rates. So this is a toxic combination for the markets. But investors didn't realize it. Today was a big wake-up call with Powell maybe inadvertently pulling the rug out from under the stock market, the rate rug. And the market collapsed because even though investors were prepared for the 25 basis point cut, I guess they weren't prepared for what came next. One of the things that Powell indicated was that, or the Fed, not just Powell, that there will be fewer rate cuts in 2025 than the markets anticipated. I think prior to today's announcement, the markets were expecting 4 rate cuts in 2025. And I think the markets had already adjusted that down to maybe 2 to 3. So one of them they kind of took off the table. So people were expecting a hawkish cut today, in that the Fed was going to cut rates, but simultaneously indicate that it wasn't going to cut as much as it had thought before. But I guess the markets hadn't fully priced in or considered what that means, because this whole stock market rally has been predicated really on lower rates, and the idea that this new easing cycle is going to propel the market higher, just like prior easing cycles. And I've known that there was going to be a lot of bumps on this road, because I knew that the Fed was not making the progress on inflation that it had believed, or that it was claimed that it was having. And I think this was reality setting in when Powell talked about how inflation had picked up, how inflation was higher than the Fed had hoped or had anticipated, that it's taking longer to get inflation down to 2%. In fact, he said in the Q&A that he thinks it may take 1 or maybe 2 more years before inflation goes down to 2%. Now, I don't think it's going down to 2% at all in 2 years. So it's going to be a long wait. But if the Fed is going to have to wait 2 years to get inflation back down to 2%, well, it's going to have to be higher for longer than the markets expected. In fact, Powell even indicated that the neutral rate, the rate that the Federal Reserve believes is neutral for the economy, not stimulative, but not restrictive. They notched that up from maybe 2.8, 2.9% to 3%. And so that also means that there's fewer cuts necessary, maybe one less cut, to get down to where the Fed considers policy to be neutral. Now, the Fed did say that they still think they're well into restrictive territory. They lowered interest rates now down to, 4.25, 4.5. So we're now a full 100 basis points lower than the peak. Although, despite this 100 basis point rate cut, the yield on the 10-year Treasury, which closed above 4.5 today, is now better than 80 basis points higher than it was when the Fed started to cut. So the Fed went down 100, but the market went up 80 on the 10-year, and even a little bit more on the 30-year. This hasn't happened in recent times, where the Fed has been cutting and the market has been moving in the other direction. And this shows that the markets are not believing the Fed to a degree. They're concerned about the growing deficits. In fact, they have this continuing resolution, but everything was down except the dollar. Gold was down about $60 an ounce today. It's up about $10. Now it's up $30. I don't know. So now it's back above 2,600. It's just regained. I don't know what just happened. I looked at the price of gold 10 minutes ago, and it was up $10. Now it's up $30. So it's regained half of the $60 loss already. So we're back above 2,600 at 2,612, but we were down below 2,600 when trading closed. But what's amazing? The gold stocks, again, got absolutely hammered today, right? Barrick Gold was down 4.5%. I'm giving you the big ones. Newmont Mining was down 5.5%. This is how ridiculous it is. So gold, before this $30 rally, because I looked at the numbers before this rally. So before this $30 rally that we're having right now, gold was down about 7% from its peak, about $200. That's it. I mean, right now it's down less than $200 from the peak. But that was 7%. If you look at Newmont Mining and Barrick Gold, Barrick Gold is down 13% year to date. 13%. Newmont is down 8%. Gold is up 25%. I've never seen a year like this. 25% increase in the price of gold. Yeah, it's not the 30% that it was, earlier, but 25% up is a hell of a year. One of the best years for gold, and these stocks are down. Now, it wasn't too long ago, before Trump was elected, the gold stocks were up more than gold. Now, they weren't up a lot more like they should have been, but they were up more. But since their peaks, even though gold is only off 7% as of earlier today, Barrick Gold is 35% below its high. 35%. Newmont Mining is down 33%. These stocks are trading at less than 12 times earnings. So what does that tell you? About the sentiment. They're less than half of the market multiple. So the fact that these stocks are down so much shows you how negative the sentiment is in gold. But how negative the sentiment is in gold, that's how positive it is in everything else, right? Because it's the mirror image. You have crazy optimism on the overall stock market, ridiculous optimism in Bitcoin, but extreme bearishness, extreme pessimism in gold. Now, what investors don't understand, what the Fed doesn't understand, and I'll get to that. Before I get into the Powell press conference and dissecting some of the things that he said, the main reason that Jerome Powell has so much confidence in the Fed's ability to slow down on the rate cuts is because Powell is convinced, and I guess everybody else on the Fed, that we've got a fantastic economy. I think he described it as remarkable. We've got this remarkable economy with a very strong labor market. This is what Powell believes. And so he doesn't think that the economy needs these rate cuts to support it. And so he can keep fighting inflation. But Powell still doesn't understand that the economy is not strong. It's not strong at all. When he was asked at the prior press conference, or I don't know if it was a press conference, maybe it was a press conference, if he learned anything from the election, and he refused to comment because he didn't want to talk politics, which, it really wasn't a political question. But what Powell should have learned from the results and the exit polls from the election.
The warning signs are flashing, and Peter Schiff's insights are more critical than ever. What do you think? Are we heading toward a financial crisis, or is there still hope for the markets? Let us know in the comments below. If you found this analysis valuable, hit the like button, don't forget to subscribe and turn on notifications so you never miss another crucial update. The next big move could be just around the corner. Stay informed, stay prepared.